Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. As always, thank you to everyone who supports this channel and our fast-growing community. Liking the video and subscribing and commenting really does make a big difference, and I thank you for that. With that said, let's break this down. Well, ladies and gentlemen, XRP at a crossroads. The U.S. banking decision could change everything. Ladies and gentlemen, we're at one of those moments, and happy Friday, in history where everything seems quiet on the surface, but underneath, the gears are moving faster than most people realize. Over the last few days, developments out of Washington have made one thing crystal clear. The United States is being forced to choose who it empowers in the next financial system. Think of it like the early days of the railroads in the 1800s. There were thousands of small innovators building tracks, but the government ultimately decided which routes received support, which companies received funding, and who controlled the critical hubs. This is so important. Who controls the critical hubs? The same principle is playing out with crypto today. Whether people realize it or not, crypto is no longer a side conversation. It's now sitting directly inside the regulatory, banking, and institutional decision-making process. Now, here's why this matters, ladies and gentlemen. The choices being made right now will shape who wins and who loses for decades. Not tomorrow, not next week, decades. XRP is at a genuine crossroads, not because of price swings or social media chatter, but because of who the system is being built for: retail holders, builders, or multi-trillion-dollar banks. This isn't hype. This isn't fear-mongering. This is understanding the infrastructure quietly being laid out beneath the surface. Because once it's built, everything that runs on top of it follows. I want you to imagine a small town in the 1800s with several local bridges across a river. Only one bridge connects to the main rail line and international trade routes. Those who own and control the bridge dominate commerce. XRP is that bridge in the crypto world, ladies and gentlemen, quietly facilitating the most important flows while others scramble on side paths. I want to talk about regulation is moving. Let's start with regulation. This is the foundation, the anchor of everything else. Over the last several weeks, we've seen real movement, not proposals that vanish quietly, but active legislative progress around crypto market structure. One committee advances a bill, another debates jurisdiction, and behind the scene, agencies that used to compete are now being forced to coordinate. Why this matters, you're asking? Ambiguity benefits no one long term. Not builders, not retail holders, not institutions. Clarity ensures the technology can integrate with global financial systems safely and effectively. Think about the early internet in the 1990s. Without clear rules for domain ownership, ISP regulations, and data transfer, the entire system could have collapsed under legal chaos. Those who got ahead were the ones building infrastructure within clear regulatory boundaries. Let that sink in. Now, here's the real-world voice. Brad Garlinghouse, CEO of Ripple, said, "Clarity is better than chaos. The legislative process can be messy and complex, but it's 100% necessary to have clarity for this and future generations of crypto entrepreneurs, builders, and users as this technology becomes increasingly ingrained into our global financial system." Under Senator John Boozman's leadership, the Senate Agriculture Committee advanced crypto market structure legislation. Garlinghouse emphasized that this helped consumer protection and innovation. Senator Cory Booker added, "We want protections for self-custody and innovative technology. We do not want to be criminalizing people who are writing code." These are not just abstract talking points. They are the foundation for how crypto infrastructure will be regulated and scaled in the United States. It's kind of funny how regulation suddenly grabs everyone's attention when trillions are at stake, right? The stakes make people move. I want to talk about banks versus builders. Now let's zoom in on the divide here. This is really important. Banks versus builders. Retail versus institution. For years, crypto lived in regulatory fog, and fog favors those who already control the rails. In other words, the banks Meanwhile, builders, developers, and retail participants rely on clarity to innovate safety. Here's where it gets interesting. The White House is leaning towards the banks. Paul Atkins, former SEC chair, commented, "For decades, we have compiled market participants to operate within a maze of overlapping and often inconsistent regulatory frameworks that reflect historical boundaries, not modern realities. If the United States is to remain the world's most trusted and dynamic capital market, then we must make a more coordinated approach." I want you to think about the early 20th century and the rise of the Federal Reserve. Centralized control of the financial system didn't stop innovation. It just changed who first got access to rails. Ladies and gentlemen, today crypto faces a similar dynamic. The rails exist, but who operates them matters. Why this matters, you might be asking. When governments choose to protect existing financial structures, the infrastructure for crypto changes shape. It doesn't disappear. It just gets framed differently. XRP sits directly in the middle, bridging innovation with institutional compliance. If you've been following this space for a while, you probably said, "Here we go again," and yes, you're not wrong about that. I want to talk about XRP in this environment for a second. XRP occupies a unique position. It wasn't built purely to reject institutions. It wasn't built purely to speculate. It was built to integrate with them, to be the bridge for cross-border payments, liquidity provisioning, and tokenized settlement. Imagine a small town in the 1800s with several bridges across a river. Only one bridge connects to the main routes. XRP is the bridge in the crypto world. Remember this. This is very important. Why repeat it? Stephen McClure explained the top tokenization protocols that will dominate in a world of Clarity Act and institutional adoption are XRP, HBAR, and Solana. Each address a specific category: financial services, enterprise, and open source infrastructure. Why this matters? When regulators talk about efficiency, interoperability, and global financial stability, they're not talking about meme coins. They're talking about rails. And XRP is one of the most advanced rails out. Ladies and gentlemen, if you're wondering why price drops don't scare institutions, that's exactly it. They're buying infrastructure. They were never buying hype, and they're not buying hype. They're buying infrastructure. I want to talk about retail versus institutional signals. Now let's talk about a pattern most people miss. Okay, this is super important. We always go over this. When XRP pulls back, retail panic is visible, but institutional accumulation quietly increases. During the 2008 financial crisis, retail investors panicked, but large funds quietly acquired assets at steep discounts. The same pattern is happening in crypto. Institutions position during uncertainty, not during hype. Less than an hour into one trading session, 53 million in spot XRP ETFs were acquired by institutions, while retail sold. History is repeating itself, even today. Why this matters so much, ladies and gentlemen, again, institutions don't chase short-term gains. They're positioned ahead of structural changes and tokenization. They're in it for the long haul. They got their Gucci clarity and Gucci conviction. That's what they're doing. Retail panic versus institutional strategy repeats throughout history. Ladies and gentlemen, if this surprises you, just zoom out. Markets have always moved like this when infrastructure is being built. It's almost like a do-si-do dance. It's just what goes on no matter what's being built. Doesn't matter if it's a skyscraper, a bridge, a mine, an airport. This is just what it is. RLUSD and stablecoin infrastructure I want to talk about. Stablecoins like RLUSD are more than just assets. They are plumbing for the new financial system. I want you to think about Ripple Partners. Rath Economics, an analyst and journalist, explained Ripple partners with ARX and OpenPay to streamline multi-currency settlement and digital asset trading. This strengthens fiat on and off ramps and creates a tighter institutional loop for Ripple's infrastructure. I want you to imagine the U.S. postal system, zip codes before. Imagine that. Letters moved slowly, lost items were common, and transactions were inefficient. Then the system standardized. Suddenly, commerce exploded. RLUSD is a similar standardization for tokenized money. Settlement, efficiency, collateral, mobility, and institutional liquidity all get streamlined. Stephen McClure added, listings on exchanges, integration into collateral frameworks, and adoption by institutional investors show RLUSD is not speculation. It's real infrastructure build-out. Why this matters, you might be asking? This backbone is what enables tokenized assets and cross-border settlements at scale. You don't notice plumbing until everything depends on it. I want to talk about tokenization and the end game. Ladies and gentlemen, the future isn't just digital. It's tokenized. Stocks, bonds, funds, real-world assets, protocols capable of handling scale, compliance, settlement will dominate. XRP ledger, HBAR, Solana, each solving a critical piece of the puzzle. Stephen McClure also added again, XRP, HBAR, and Solana are the top 3 protocols for tokenization in the Clarity Act era. Infrastructure, assets that will power the new financial system. I want to talk about retail panic versus institutional strategy. Repeats here again. Short term, volatility won't touch the systems being positioned today. Trillions of dollars in tokenized assets are expected on-chain in the next 2 to 5 years, ladies and gentlemen. Let that sink in. You have to let that sink in. This is like the gold standard in the 1800s. Those who positioned on gold rails quietly built enormous wealth, while day-to-day traders missed it chasing paper money fluctuations. Ladies and gentlemen, if you're waiting for the market to tell you it's safe, you're already late. Never going to do that. Here's for perspective before we get into our rant. Take a step back. If all you see is daily price action, this feels slow, frustrating, unfair. But infrastructure doesn't get built in a bull run. It gets built quietly, boring, during uncertainty, like watching paint dry on the wall. Ladies and gentlemen, I always say Rome wasn't built in a day, but they were laying bricks every night. And its roads and aqueducts created wealth and stability for centuries. Crypto rails are similar. The effort is unseen until the benefits are monumental. So got to ask yourself, are you focused on daily noise, or are you on the system being quietly built beneath it? Ladies and gentlemen, XRP is at a crossroads, not because of headlines, but because the financial system itself is choosing a direction. Banks, regulators, institutions, they are debating whether blockchain will exist. They're deciding how it will exist and who will benefit. This is like investing in the railroads in the 1800s versus day trading the stock of a single railroad. One builds lasting opportunity, the other chases noise. Ladies and gentlemen, if you see value and you see in the bigger picture, subscribe, turn on notifications, smash the like button, stay tuned, because the story is just getting started. Well, ladies and gentlemen, you made it this far. I appreciate you. And like I always tell you, the candy's at the bottom of the Italian ice. In yesterday's video, we said something, right? There are 2 things. One is gold going to be gold. It's going to be an HQLA repo asset. There's probably going to be a massive dip. It could be happening right now for all I know. And that massive dip could take down to 4,000. Yesterday we said that. Gold right now is trading around 4,800 and change. The low is 46.88. A lot of people got cut up like sushi, taken out in body bags. Massive. XRP's down at $1.73 right now. HBAR just made a 365 day low. Ladies and gentlemen, what's happening in the gold market is what we call demand destruction. It happens when markets stop working, not because people stop wanting an asset, but because they cannot access it or afford it or participate normally. Right now, gold is seeing volatility-driven demand destruction, where options are too expensive to use. It's unbelievable. You can't touch options right now. Silver is facing an emerging physical supply breakdown, supply chain breakdown. And I should say from cash-constrained market makers to refinery bottlenecks. We went over that yesterday. And empty dealer shelves. Ladies and gentlemen, when participation fails in the supply chain, markets cool. Volatility rises. And speculative positions get flushed like they have been and continue to be right now. And should be plenty to tell you how careful you got to be. Look, it's a bubble alert for gold, short term at least. And we kind of agree with this. And we told you yesterday that we thought it would drop, okay? So I'm not telling people to sell because it's a bubble. Get a grip, all right? We're telling people it's okay to take profits if you need the money. Hedge your physical if you know how to do that. And be careful buying dips right now because nothing fundamentally makes sense. Structurally, market right now is very different. And right now it's about demand destruction. We could rally 500 to 1,000 in gold, or it could drop. We could see 500 to 300 in silver, it could drop. If you want to play it safe, go play coin bets and go trade leverage ETFs, not financial advice. Ladies and gentlemen, I don't say this for my own health when I'm telling you all this, right? What's happening right now is unbelievable. I'm going to tie this all into XRP. And again, our main theme. Welcome all the new people to our Patreon, all the membership channels. Welcome everyone to the Crypto Republic. And the polls, we're going to do the rants from now on at the end after I go through the video so nothing gets lost in translation. Again, being a financial mercenary is knowing that pigs get slaughtered and hogs get fatter. Pigs get slaughtered and hogs get fatter, ladies and gentlemen. Know what you need to get and get out. Being a mercenary is about getting what you need to get. So people are chasing trades that I hope that they got risk management. They got a lot of things going on, but I want to talk about this. First one, why is this happening? Well, ladies and gentlemen, the catalyst that you're going to read about in the press, and it's largely correct, is Trump has announced intends to put a more hawkish person in the Fed. And that's one of the reasons the metals have gotten beaten and dropped. That's also a reason for its dollar being stronger. And it's also a reason for stocks to be lower. That's a catalyst. It's not a reason, ladies and gentlemen. Remember, there's a difference between a catalyst and a reason. There's a difference between a catalyst and a reason. We're always going to go over this. But it's a good one and it's legitimate. The second thing I want to bring up, there's a VAT tax on silver. This subject's coming up again. There's a VAT tax that's reflected in the differential in prices between Shanghai and COMEX. Okay, I always tell you about that. What I use is the difference in the compass for the spreads in Shanghai, CME. And Japan sets the tone, all right? Japan sets the tone. From what we're hearing from our offices abroad in Singapore, now we can be wrong. I'm not married to this. I don't live in China. Something could be lost in translation, but we've been told that the VAT tax is negotiated after the fact. So you don't need to broadcast global price if you can get away with it. But number two, VAT tax is also negotiated afterwards because it's not necessarily true of who's going to be paying the tax. Now that's information out of mainland China. We're not there. Ladies and gentlemen, what we believe is happening, right? And this is a time to be greedy. This is a time not to be afraid, okay? Things are on sale. I told you that XRP and HBAR are institutional assets now. They're going to be bought up by all the institutions through ETFs. So as they drop right now, it's being bought up. It's not going to be a pretty story. You're buying infrastructure in the future. That's what you are. It's very Machiavellian what's going to go on. I'm going to talk about something that I just got off the phone explaining to a very, very large family office that was referred to me just last year, who actually I have to go see over the weekend. So there'll be no weekend videos, unfortunately. I'm sorry. I'll be back Monday, but I have to go see them in person. Ladies and gentlemen, this gentleman who's been put up to the Fed, do you realize when we talk about gold becoming an HQLA asset to compete against U.S. Treasuries? Well, how do you stop that from happening? What's the biggest roadblock you can throw up? Keep interest rates where they are. I'm not saying the interest rates are going to stay there. I'm going to say you'll stop the ascent of silver right now in this market by putting the fear in the market that there'll be no QE, that there'll be no free money, that there'll be no printed to win it, that interest rates won't be zero. What does that say to gold? That says, come back down to reality. Come back to our reality. Yesterday's video, we said that there would be a drop, that we assumed the drop to 4,000 could happen. We saw it. We told you yesterday before anyone else. We said that. Go back and watch the other video, okay? It was somewhere in my rant that got lost in tirade, okay? We said that to you. So he comes into the boards of what we're paying attention to, and everything sells off because everybody thought free money and everything else. So if you show the overall range of gold to be that erratic, that stops that master plan for BRICS being the unit. And remember, BRICS using the unit, half of the unit's valuation is going to come from gold. Again, some people, and why I'm going to talk about, some people play on the 6 levels of wealth with Machiavellian. They're on the 6th level. This was a 6th-level move. This was outright a 6th-level move. And in my lifetime, even today, our organization and myself work as proxy for people in the mining industry. Some of the biggest names, because some of the biggest names just can't work with certain people regardless for whatever reasons of why. So they do things through proxy, right? So if you want to stop the rise of gold and the overall challenge to the treasury market again, right, you slam the brakes on the price of metals going higher. This man in the mix does that, okay? Again, ladies and gentlemen, the DTCC is moving, doing what they got to do. Again, clarity has to come in some shape or form so that we can't see some form of insurgency lawsuits against the crypto market going forward. So when we were always in the camp that something has to get done, I expected, and we were saying this for the last 6 to 7 months, that they were going to put somebody in that slot to be spoken about that was more hawkish to stop the rise of precious metals. That's why I have to go see people, after I make this video, I'm getting on a plane. Only because, again, that was the main theme that I was speaking, and I put my reputation on that, and that happened. And in the world, in the Mariana Trenches where we live, I'm putting my name and reputation every day on the line for decisions I'm making that are 1 to 2 to 3 years out. I ain't worrying about what's happening now. So what I need you to do right now, I need you to remember why you're in this space. And I'm going to explain this through a Machiavellian style, why you're a financial mercenary and why you're here with us. And not to be upset today, to be so excited today that the future is going to be so much better that you should be saying, thank you, inflation lord. Thank you. Thank you. You know why? Because again, when I said the Harry Houdini freak show is over, I got to take that back. I guess there's going to be an encore. The freak show just began again. I didn't watch the end of the credits. I didn't get the Italian ices. We have the ability right now to be the Iramura underneath everybody, eating everyone who's getting cut up like sushi. If your trade sizes are too large, I feel sorry for you. You got a lesson. This taught you a lesson, okay? But at the end of the day, I'm about to read 6 things to you that's going to put this all in place. We're feasting on this, and if you can, take advantage of this. Take advantage of this, okay? Because make no mistake about this. This is a direct assault. This man being put into the name of this, as far as we're concerned, in our professional opinion, none of this is financial advice. This man put the brakes on the rise in the metals market right now. He took the fluff out of that. It puts a talking point that's going to be in every major bank until we get a vote on this guy. It's unbelievable. So you just put risk in there. Nobody saw this coming. Again, but this doesn't change where we're going and why. So I want to introduce you to something right now. And listen, we're about accumulation. We're about taking loans against assets again. That's what we're about. But I need you to buck up here right now and not be afraid of this. I want to talk about the 6 levels of wealth and power from Machiavellian. Level 1, survival stage, okay? Decisions are dictated by fear, bills, eviction, unexpected expenses. Life is reactive. External forces control your survival. You're vulnerable to anyone with slightly more resources than you. Mistakes are costly. Survival fosters compromise and poor choices, okay? Almost every single decision you make is dictated by fear. Anxiety drives your choices. You're not in control of your life. Fear of eviction, fear of the collection call, fear that one expected expense will destroy you, everything you've built. Life is precarious, always on the edge. You live at the pleasure of others, and the pleasures can be revoked at any moment. Freedom is minimal. Bosses, landlords, and creditors dominate your life. You can take that predatory loan. You stay in the toxic job. You accept conditions that slowly destroy you because the alternative seems worse. Hardships force compromise that limit growth. Every bill you can't pay teaches you something about money. Every margin call teaches you something about money's true nature. Lessons are present in struggle. Learning's the first step to escaping. Here's the trap. Reactive vulnerability and poor decision-making keeps you stuck. Opportunity uses hardship as lessons to understand money and system and legend. Number 2, the illusion stage. Stabilized enough to pay your bills and save a little. Comfort provides an illusion of security. Still dependent on external forces. Most stop here. They're mistaking stability for freedom. Key sentences. You can pay your bills most months. You have a little bit saved, enough that you're not panicking every single day. Fragility, stability, small buffer, but not true independence. To someone still in level 1, you look like you've made it, but you haven't. Perspective matters here. Comfort is deceptive. You work for someone else. Your income stops the moment you stop performing. You're still dependent. Your life's tied to external control. They're performing prosperity while living one emergency away from disaster. Comfort masks vulnerability here, ladies and gentlemen. What if security you built is actually the thing that's keeping you small? Okay, the trap here, the awareness of the illusion, you see it, but the key to moving forward is the awareness of the entire illusion. Everybody's in crypto because we believe the awareness of this illusion. Stay with me here. The trap at level 2, comfort creates complacency. Fear of risk prevents growth. Opportunity, recognize the illusion. Prepare to leave the treadmill for freedom. Prepare to leave the treadmill for freedom. That's why you become a financial mercenary, okay? That's why what's happening right now, try to leave the illusion. Recognize it for what it is. Level 3, the awakening stage. You've created an asset, business, or skills that generate income and options. Strategic thinking replaces reactive survival. You have breathing room, space to plan, experiment, take meaningful breaks. You've stopped trading time for money in most basic senses. You've built something. Maybe it's a business that can run without you present every second. Maybe it's investments that generate income while you sleep. Maybe it's a skill so valuable that you can command real compensation for it. Multiple paths to independence. So for the first time in your life, you have options. You can choose which opportunities to pursue. Your metal collar around your neck is loosened just enough that you can turn your head and see the horizon. You can see beyond day-to-day survival. Maybe you could take a month off and not lose everything. Security allows experimentation and reset. You can turn down opportunities that don't serve you. You can start choosing instead of just accepting. The real freedom of choice emerges here. It's a test because now you have enough security to get comfortable again, enough success to start believing in your own story, enough breathing room to stop pushing. Complacency is the main trap. The hunger, calculated ambition, that's what separates level 3 from what comes next. There's a difference between someone who's escaped poverty and someone who's building an empire. Most develop ambition beyond comfort. If you think anything like Machiavellian, you're not going to be happy being an average or slightly above average person. You're still the sheep that's part of a herd. And the wolves of society are dictating what really happens. Your awareness of power dynamics is about stepping out from the herd. Your comfort can halt growth. Risk. I'm going to stop here, and I want to tie this in because there's 4 or 5 more levels. Again, what's happened here right now, you see the illusion why people go into crypto. It's not financial advice because crypto is one of the last ports of calls, in my opinion. It's not advice that allows you to break free of what's happening. It also allows you to play in the world of what's happening. No different when the gold rush happened in the 1800s, okay, in California. When the gold rush happened in California, the wealth was made by Wells Fargo transporting gold back and forth. Pinkerton, the first private security company, okay? Levi's and Strauss selling people what they needed to mine. Again, there's a lot of ways to make money here right now. Putting this in context, this is what happens. Ladies and gentlemen, if institutions are buying through ETFs, why would you sell what you have right now if you didn't? Why? It takes time for infrastructure to be bought up. This is where you need the Gucci conviction, the Gucci clarity to stay. And if you still made it at this point, I appreciate you. Why I went through level 1, level 2, level 3, this is where most people are. I'm not going to tell you what level I'm at because it doesn't matter. But again, I'm someone who's prepared to risk everything, my reputation, to go much further. But that's what I did months ago. And that's why I got to get on a plane. And I'm not taking a bow or a grandstand or a Jubilee celebration. I feel sad that I can't sit there and give everyone a pep talk every day. I mean, you're coming here for that. You're looking at the markets right now. People are horrified. I get it, right? But the ETFs are they're still buying. So they're not throwing in the towel. Why would you? So if you're over leveraged, you just learned a lesson right here. Jesse Livermore, right? This is where your Gucci clarity comes in. This is where everything that we talk on matters. It's so important right now. So this is the most unbelievable move. You throw a guy in there whose talking points is hawkish, interest rates. You stop the entire rally right now. You put tracks on that. You put brakes on that. Listen to me. We need the bills to go through because we're all involved in infrastructure investments here in the globalization and tokenization of what's happening. We're involved right next to them. Okay, we need clarity. We need this to be ironclad. There can't be some insurgency type lawsuits coming out whenever that is. But again, I believe for the first time the banks feel threatened by what was being thrown out there coming out of the east side and the unit, the tranche. East side. Why I say this, and I'll get to the end of this, is because, look, gold won't go much higher if they don't know what's going to happen with this. Goldman Sachs target was 5,400. It got hit. I'm not saying that it can't go higher. I'm just saying there's a whole lot of uncertainty right now that's enough people are going to take a step back and have more conservative targets. Again, I believe printed to win it will begin at some point, but I also said in the last video, we thought gold would drop. We said that to you yesterday. I told you that yesterday night. It's almost like, again, when I told you I'm designed for this and I'm not grandstanding, this is all I do. I look at macro stories of where we're going to go, and I look at the chessboard of what's happening through global financial warfare. So this is my daily financial combat battlefield update, okay? Stay frosty. Remember what is. We've been overrun. Right now, we lose purchasing power of our money every day. This was a move to stop metals going parabolically higher, to have questions in boardrooms. Don't forget why you started this. If you can, DCA all the way if it makes sense to you. This is not financial advice. If you got bitten by over leverage, If you really want the next edge and you want to come to this and come join us in the Patreon and tips from the pits and really take it up the next level, okay? If you really want to learn what it means to be a financial mercenary. But with that being said, ladies and gentlemen, Gucci conviction, Gucci clarity. Do not get caught up like sushi. We are the remora. We are the remora. Remember the ones I talk about. H-bar, ETF, XRP, ETF. We like ICP. We're going to start talking about that. Don't forget why we've done this, okay? You cannot forget why we have started this, and that's the most important situation, right? And if you want me to go over more about the other levels of why, let me know in the comments. But your liking the videos means a lot to us, and the comments mean a lot, okay? And with that being said, ladies and gentlemen, I want you to have a great day. Always stay emotionless and watch XRP closely. This could be a defining moment. This content is for informational entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all always.